Are you thinking about trading futures but don't know where to begin? By the end of this video, you'll understand exactly what futures are, why they're such a powerful tool for traders, and how to start trading them, even as a complete beginner. Now let's dive in. Futures are contracts. They're an agreement to buy or sell something like gold, oil, or the NASDAQ index at a set price in the future. And here's the cool part. You don't have to actually own the asset. So why futures? They trade nearly 24 hours a day and you're not waiting for a stock market bell. You're just trading price movements. If you think the price will go up, you buy. If you think it'll go down, you sell. Typical, right? And they use leverage, which means you can control a very large position with a relatively small amount of capital, but quick water. Leverage is the double-edged sword. A lot of traders take themselves out because of it. And that's not trading advice, that's just Before you start, you need to know the basics. First, contracts and symbols. $2 per contract for MMQ, $50 per contract for ES. Secondly, tick values. Tick values are the smallest amount of price movements that can happen within futures. 4 ticks make 1 point. So for instance, if MMQ equals $2 per point per contract, then 1 tick equals 50 cents. It takes 4 ticks to equal 1 point. Thirdly, margin. This is the amount that you're required to have in your account before placing the trade. So step 1, choose a broker. Look for the broker with the best reviews. There's plenty out there, but we're not going to focus on that just yet, especially if you're just starting out. Step 2, get a trading platform. I use TradingView. A lot of traders do. It's probably the best one out there, but there are others. Step 3, follow an economic calendar. I use forexfactory.com/calendar to know when the market's going to have a big news event so it doesn't catch me off guard. And if you're aiming to pass a prop firm evaluation, such as through Apex or TPT, these things are quite important to know so you don't break their rules, because there are a lot of rules and we're going to talk about it in a future episode. So here's a super simple way to start. Focus on one pair, such as MMQ. Number 2, use one time frame to execute your trades. But remember, top-down analysis is your friend. So trade only during key sessions, such as the New York Open. But wait 5 or 10 minutes for the market to stretch. Thirdly, you only want to risk about 1% of your trade account. That's how they get you. People get greedy and they try to get the big wins out front. Don't do it. Always set a stop loss and know where your profit target is. Always. Never get into the trade without knowing that. Your goal isn't to win every trade. Your goal is to stay consistent and to protect your capital. I've seen countless beginners blow their accounts because of these main things. Number 1, overtrading. Taking too many trades in a single day. Number 2, ignoring the news. Big announcements can have major price swings. And if you're doing prop firms, that's the quickest way to get cut. And number 3, trading too big too soon. Start small, scale up, and then just focus on consistency. In my next video, I'm going to show you how to pass that prop firm evaluation in an easy step-by-step process. So be sure to subscribe, and if you can, hit the notification icon. My name is Bruce Rain, and this is Trader's Ambition. Let's get it.